Okay, I think we're live. Hello, Dino.
Hello, hello.
Okay, doing a mic check. If you can hear us, please give us a thumbs up. Okay, just doing a mic check. Welcome everyone to tonight's stream. So today is Thursday, the 9th of September, 2021. So it's 9/9. Hope everyone's staying safe. So again, tonight we have our special guest, Dino from Santiment. Welcome, Dino.
Thank you. Thanks for having me.
It's always a pleasure to have you. Okay, so we've done the mic test. Okay, so if you're just joining us, feel free to share, like, and subscribe. Also, if you're joining us on YouTube, click on the bell icon and choose all, so that every time we come live, you will get notified. You'll get a ping, right? If you're on Facebook, please follow us, and if you're tuning in on Twitch, welcome, and follow us as well. Okay, thank you for confirming, Alex, and welcome to the stream. So now, anytime while Dino or I am speaking, feel free to throw in your questions or your comment in the comment section below. So we have a pretty exciting show tonight, so I won't talk too much, but I'll just do a quick recap on this week. Right, it's been a pretty interesting week. We've been pumping, and then there was a flash crash just as El Salvador, as of the 7th of September this year, El Salvador, it went into law that Bitcoin as legal tender. So you can actually rock into Starbucks, or you can go to McDonald's and you can pay with Bitcoin. So that's amazing. And it's the first country in the world to do it, to make it legal tender. And also, for those of you who don't know, before that, it was USD only, US dollars only. So El Salvador doesn't have their own currency. Well, they did once upon a time, but they've been using the US dollars. And so now you can use both US dollars and you can also pay with Bitcoin. And that's amazing. And so without further, it was kind of coincidental, but I'll let Dino read the tea leaves to tell you what else has happened, right? But okay, so without further ado, I'm gonna let Dino introduce himself and what Santiment is, what Santiment does, and then we'll get on with the show. So thank you for joining us, everyone. All right, Dino, over to you.
Sure, thanks, Andrew. Yeah, so like Andrew said, my name is Dino. I'm one of the market analysts, and I work in marketing at Santiment. Santiment.net is a company that essentially provides a comprehensive overview of over 1,500 different coins from a variety of different angles. So unlike just price aggregators like CoinMarketCap and CoinGecko that are mostly focused on price and volume based data for cryptocurrencies, what we do is we provide a more broad overview of what's going on with specific tokens. So on our platform, you can find data directly from the blockchain for over 1,200 different cryptocurrencies. So we provide on-chain data, social activity data, and development activity data for a variety of coins, as well as derivatives information for the top 5 coins at the moment, although we're planning to expand that as well. So essentially, our platform is sort of an all-in-one token intelligence platform where if you are interested in looking at a specific project or a specific digital asset from a more comprehensive perspective to get more context about what's going on, both on the network and on the social media and on the side of the actual team, how the developers are sort of progressing with their investment in the project, you can do that and much more on Sandbase, which is our flagship platform. So everything that I'm going to be showing you guys today is available on app.santiment.net. So if you're interested in this type of analysis, there's a 2-week free trial for all of the metrics on our website. So yeah, if there's nothing else, Andrew, I can share my screen and we can sort of start talking about it. I know that before when we were talking about what we wanted the sort of topic of this the call to be, I thought Ethereum's massive rally would be the most interesting thing to discuss, but it seems like the market had other plans for us. Especially with this, like you said, like the flash crash. I think Bitcoin lost around at one point 14.7% 2 days ago. So yeah, I mean, we also made a couple of videos on our end just talking about what likely happened. I will say that based on on-chain data, this wasn't sort of a crash that was fundamentally justified. It seems like most of it originated from the derivatives market. It seems like similar to what we've really seen in May and April as well. There was a number of over-leveraged longs that sort of once they started getting liquidated, it led to a cascading liquidations. There was, I think, around $1.5 billion in liquidations 2 days ago. So it just sort of crashed the entire market. Well, not the entire market, because a lot of coins have already rebounded, like Solana, Algorand. I've seen coins continuing their pump like it's nobody's business. But the top caps, especially Bitcoin and Ethereum, they're still sort of consolidating around their new normal. So I think it's probably a good idea to talk a little bit about the crash and what we're seeing in both Bitcoin and Ethereum's metrics afterwards. Just to kind of give a sense of where we are and how the crash has sort of impacted the behavior of important stakeholders in Bitcoin and Ethereum. Andrew.
Yeah, definitely. And just before Dino starts, I'd just like to say that nothing that we discussed tonight is financial advice. This is just a discussion between two friends, and it is for educational purposes only. So, if you are going to take any financial decisions, please consult with your financial advisor.
Right. Okay. So let me share my screen. And let me know when you see my screen.
Yep.
Right.
Yeah. Yeah. We're just waiting for it to come up. And yeah, it's also been a pretty interesting week for Solana.
Yes, it has. I mean, we can talk about Solana. Obviously, at the moment, we don't have on-chain data for Solana on our platform, but we're planning to expand our on-chain coverage onto additional blockchains in the next couple of months. But we do have social data and development activity data for Solana. It has definitely been an interesting couple of weeks for those metrics. So we can dive into those at the end of the stream a little bit if the people are interested. You should be able to see my screen now.
It's not coming up yet.
Okay, let me try and do it again.
Yeah.
All right, allow.
I think that looks like it's coming up. Okay, fantastic.
Yeah.
Yep, it's up and running.
Good. So, all right, let's start with Bitcoin a little bit and talk about what Bitcoin looked like before the crash and what it looks like today. So on Monday, basically 24 hours before the crash. I wrote a weekly report. So on Sandbase, for all of those pro subscribers, we write a detailed report on every Monday, where we sort of cover the current state of the market and especially Bitcoin, from a variety of perspectives, including Bitcoin's on-chain data, network activity, the behavior of large addresses, aka whales, the social sentiment towards Bitcoin, and how that might impact the price action of the coin, and so on and so forth. From a purely network activity perspective, so from the perspective of Bitcoin's network activity, the Tuesday crash wasn't necessarily justified. So what I mean by that is, we can start by looking at a few different on-chain metrics for Bitcoin, just to kind of give you a sense of where we are at the moment. So the one metric that we like to analyze at Santiment, just as a sort of a proxy for token related demand and the amount of interest in a coin based on its network activity, is something as simple as the amount of daily unique addresses interacting with that coin. So as you can see, we're currently looking at the amount of unique addresses sending or receiving Bitcoin over the last 12 months, right? So one thing that you can sort of very easily see is that, even if I zoom out a bit, is that the amount of addresses interacting with Bitcoin have sort of catapulted or soared from the sort of the coronavirus crash, which happened here last year, all the way up until the May correction. So, for example, if I draw a line here, you can see that there was an about 100% uptick in daily active addresses. So we've gone from, let's say, around 550,000 daily active addresses on average to at about 1.13 million. So there's definitely been, basically, the amount of daily activity on the Bitcoin network has doubled between May 2020 and May 2021. And that's great. In general, sustainable price rallies often coincide with an uptick in network activity, and a sustainable uptick in network activity at that. So not sort of a solitary spike in daily active addresses, which could mean anything, but rather a very long-term and ongoing increase in the amount of interest in a coin. Basically, on-chain analysts use active addresses as a proxy for token-related demand. If there's more addresses interacting with the token on a daily basis, it means there's more eyeballs on it, there's more sort of new blood moving into the market, and as a result, there could be fundamental support for a sustained rally. So that was what happened before the crash, right? And then after we saw the May correction occur, there was a clear decline in the general level of network-wide interest in Bitcoin. So we've very quickly gone from an average of about 1.05 to 1.1 million daily active addresses, all the way down to, I think it was around 500,000, around 572,000 addresses in a span of 30 days. So I wrote at the time that between January 1st and May 12th here, there were only 5 or 6 days that the amount of addresses interacting with Bitcoin fell below 1 million. Now, 1 million obviously sort of an average, an arbitrary milestone, but it's a decent gauge of how high Bitcoin's network activity was before the crash. And then since then, we were really unable for a very long time to breach that 1 million mark once again, suggesting that there's another inflow or influx of new users and or sort of recurring users on the Bitcoin blockchain. And finally, let me zoom in so you can see it a bit more clearly. Finally, we were able to break that sort of elusive psychological milestone of 1 million addresses right here on September 2nd. So if I zoom out again, just so you can kind of see where it is, it's clearly that since the bottom here on July 20th, where Bitcoin briefly went below 30K and rebounded quickly. Since that bottom, the amount of addresses interacting with Bitcoin has been on a stable incline. So from a perspective of on-chain data, just general from a perspective of Bitcoin's network activity, we are seeing support, like fundamental support for another all-time high push. So it's not as if the price of Bitcoin is rising into a declining or lethargic network activity, which would be a bit more concerning. It's actually they're going Bitcoin hand in hand. So from that perspective, I don't think the crash that occurred a couple of days ago was really justified. We have obviously seen a bit of a correction in both the price and the network level activity for Bitcoin since the crash, which is to be expected. But overall, this is what we were seeing, and I stand by that. Still, assuming that Bitcoin's daily active addresses continue to grow, it seems to suggest that the market has once again warmed up to the idea of Bitcoin pushing into a new all-time high. And like I said, very often, sustained price rallies require new blood flowing into the networks, and daily active addresses are sort of a good gauge of whether that's actually happening or not. Now, as far as what happened specifically or what metrics were impacted by the crash on Tuesday, there are a few of them that. So I wrote an article yesterday saying, market crash, do you want good news or bad news first? So there are, from a perspective of on-chain data, there are a few positive signs that occurred from this latest crash. So I can talk about a few of them, not just for Bitcoin, but for Ethereum as well. So this latest crash seems to have prompted a little bit of a weekend sell-off. Now, I'm saying weekends in particular, and you'll see in a minute why. It seems like there has been a shakeout of holders that have acquired Bitcoin at extremely high prices and that started selling them probably at a loss as the correction occurred and it unfolded, suggesting that they were, fearful of further corrections. Now, obviously, there's an old motto in not just in crypto but in stock markets as well, that shakeouts can lead to breakouts. So it remains to be seen whether that applies here. But there are signs in Bitcoin's on-chain data that suggest that we have seen a shakeout of weak hands in particular. One metric that I like to look for when it comes to trying to visualize weak hand shakeout is Bitcoin's network realized profit or loss. So obviously this is a mouthful, but I'll explain what this metric does because it's fairly simple. So this is an on-chain metric that tries to calculate the overall ROI of all daily transactions on the Bitcoin network. So the way that we calculate this metric is for each unit of Bitcoin that moves on the blockchain, we take the price at which it was last moved. So let's say that there were a bunch of, there was a unit of Bitcoin that was last moved here, right? When it was about 17,000. And we assume that this was its acquisition price. The price at which it was last moved, we assumed that for this unit of Bitcoin, this was the moment at which it was purchased. And then the next time the same unit of Bitcoin moves on the blockchain, let's say it moves here, where Bitcoin's price was around 58K, we take the price at which it was moved then, and we assume this was its sell price, right? And so the difference between those two prices for all daily transactions becomes this metric. So essentially, when you see large spikes in Bitcoin's network profit loss, what that points to is the fact that coins on the network are moving at a significant profit relative or compared to the last time they moved on the blockchain, suggesting elevated profit taking activity. And then vice versa, when you see these dips, it means that coins on the blockchain are moving at a relative loss compared to the last time they moved on the blockchain. By the way, it seems like my battery is going to die. Just give me 1 sec to plug it in so that you don't lose me. All right.
No worries, Dino.
All right, here we go.
Cool.
Okay, that should do it. Now, the reason why I'm saying all this is that alongside the May correction, we have seen some of the largest drops in Bitcoin's network profit loss in history. It basically suggests that at these points in time, the Bitcoins that were moving, the units of Bitcoin that were moving on the blockchain were on average moving at a significant loss relative to the last time that they were acquired. Now, keep in mind that this was still Bitcoin at like $40,000. It was only a few months that Bitcoin has ever reached those numbers or levels before. So this was quite a sort of a weekend shakeout, or holders, or recent Bitcoin converts, addresses that have acquired Bitcoin over the last couple of months only. And as you can see, several of those large drops in Bitcoin's network profit loss have coincided with local bottoms in the past. And this is not just something that we see for Bitcoin. This is also something that we see for other coins as well. Essentially, these sort of large drop-offs in a coin's network profit loss mean that coins are being moved at significant loss, and in general, it usually points to some panic sell-offs and weekend checkouts that could, assuming there's enough buy the dip pressure on the other side of the aisle, could transform into a relief rally. So if I zoom in now, what you're going to see is that even though it wasn't the strongest, this was the largest drop in Bitcoin's net profit loss since July 2nd. So it was definitely a notable event, to say the least. The fact that the amount of, or sort of on average, the units of Bitcoin that were moving on a blockchain were moving at a relative loss compared to the last time that they moved. Now, once again, this is Bitcoin at 46K. So there's not a whole lot of days in the history of Bitcoin that holders were able to be higher, or sort of that they were able to acquire Bitcoin at higher prices than now. So only the last couple of months or so, right? So what it suggests is that the holders that have acquired Bitcoin at sort of these levels, so over the last several weeks, or back in the May, April days of the rally, were now, some of them were likely moving their coins at a loss, possibly to sell, suggesting there's a little bit of a weekend shakeout occurring after the correction. In our experience, this has shown to be a positive signal every once in a while. Obviously, there's no silver bullet, but it at least points to a elevated amount of pain by Bitcoin investors. Markets, their main job is to inflict maximum amount of pain to as many investors as possible. And however painful that is, it's often necessary for another sort of leg up. So the fact that we are seeing people scrambling a little bit, panic selling, I think it's a good sign for the longevity of Bitcoin's rally. Now, that's as far as Bitcoin is concerned. I also wanted to show what we saw with Ethereum, and not only for net profit loss, but also when it comes to its exchange metrics. So what we are seeing right now is Ethereum's exchange flow balance. So for those that are unfamiliar with this metric, essentially what this metric tracks is the difference between the daily inflows of Ethereum to known exchange wallets and outflows of Ethereum from known exchange wallets. So the premise is that the more Ethereum, or more of any coin that is moving to known exchange wallets, the more there is a potential sell side pressure, because why else would you be moving your hard-earned coins to exchanges other than to sell? Obviously, there are now a few other use cases. Some exchanges offer staking possibilities and whatnot, but especially when you're making these moves at these at times of high price volatility and high market volatility, it's more likely than not that you're doing that in order to sell, right? And sort of move out of the coin for the time being. So what we have seen for Ethereum over the past couple of days is quite an uptick in the exchange flow balance, which means that the difference between Ethereum moving to exchanges and Ethereum moving out of exchanges is very much in favor of Ethereum moving to exchanges. Basically, there's more ETH going to than out of exchanges, meaning that there is a rise in potential sell side pressure. Once again, it seems like some holders, weekend sell-offs are occurring. Some holders are looking to reduce their exposure for the time being because they're fearful of further corrections. I have seen several very popular Bitcoin channels set support at 38K. So it seems like there is a little bit of a worry that we are going to drop further down. Now, if you look at previous times that Ethereum has seen this spike in exchange flow balance, I will talk about this outlier in a second, but you can see it here at the start of the recovery. You can see it here at the local bottom. You can see it here at several local bottoms throughout the crash. So it's not too surprising to see sort of major sell-offs sometimes coincide with local bottoms, because once again, assuming there's enough holders or investors looking to buy the dip, this type of a move can be can be rejected and become a start of a bullish relief. So in either case, another sign that we have seen a little bit of pain happening on the Ethereum network, and holders scrambling to get out of the coin for the time being, all of which could potentially mean that the shakeout has happened, and we could look for another sort of relief rally in the next couple of days or a couple of weeks. Now,
Dino?
one other thing that I thought was very interesting for Ethereum in particular, there's a few sort of very alternative on-chain signals that we like to look for, as far as trying to identify potential bottom markers. This is what I'm about to show is something that I don't think a lot of people look into, but it's something that so far seems to have proven quite effective. So we like to keep an eye on it, especially when it comes to these massive crashes like we've seen 2 days ago. And what I'm talking about is the amount of MakerDAO CDP liquidations, essentially the moments in time where CDPs that are or collateral depositions that are available on, or sort of that have been created in MakerDAO are liquidated, which would once again be similar to sort of liquidations on the derivatives market. They would mean they would be a pain marker. It would suggest that DeFi participants are feeling the burn because some of their CDPs have been liquidated. So one way that you can find this out on Sandbase is we can go to wrapped ETH, which is used as collateral in CDPs, and we can scroll all the way down here to MakerDAO stats and look at the amount of liquidations of MakerDAO CDPs. And I'm going to zoom out to the last year, and I'll just sort of let this image speak for itself. Obviously, like I said, there's no silver bullet, and there's no guarantee that we don't see another sort of leg down in the next couple of days. However, what we have seen previously, at least so far this year, is that major spikes in liquidations sort of act as a maximum pain marker. It means that the market has succeeded in inflicting exorbitant amounts of pain and suffering to their holders and to their participants, and have in the past coincided sometimes with local price recoveries. So we have seen it here. We have seen it both here at the first bottom after the correction and here after the second one. We have seen it here during the June bottom, and then once again yesterday, or sorry, 2 days ago, there has been a massive amount of liquidations within the MakerDAO system. This is only looking at wrapped ETH as collateral. There have also been liquidations, sort of substantial liquidations for other coins that are being used as collateral in MakerDAO CDPs. So once again, a signal that the market has felt the burn. There has been quite a little bit of pain occurring in that we can sort of track on-chain wise. And as a result, I think there are precedents to suggest that we might be looking at a local bottom, at least for the time being, from an on-chain perspective, right? So, Andrew, before I continue, anything you want to add or ask before I move into sort of the bad news part of the stream?
Yeah, definitely. Look, again, for those who have joined us, thank you for joining us, and hope you guys are enjoying the stream so far. One thing I'd like to highlight now, you notice how much transparency we're seeing in these markets, right, compared to the traditional stock market that everyone is accustomed to. So you're literally seeing where the big whales are making their moves, right? You can see when high volumes of whatever coin, right? In this case, we saw Ethereum, right? A high movement, right? Or high volume of Ether moving into known exchange wallets. Now you can't really see that with stocks, can you? I mean, in the stock market, like it's not that obvious. But here, if you know how to read the tea leaves, right, you at least get an indication of what's happening. Like so in the crypto markets, there's actually a lot more transparency than there is in the traditional stock market. I just wanted to highlight that. All right, and we're moving on to the bad news.
Yeah, so these are all signs. Essentially, this entire sort of exposition of mine was to say that there are certainly on-chain signs that, number one, weak hands have been shaken out quite substantially, and number two, there's been quite a lot of pain felt by its holders, both of which are often necessary precursors to a relief pump. Now, there are also relatively concerning signs occurring currently on not just on the network side of things, but also on the social side of things. So I also want to highlight some of our social metrics, because outside of on-chain data, that we currently have for over 1,200 different coins. What's unique about Santiment as a platform is that we also track social activity of every coin in our database, which is almost 2,000 different cryptocurrencies. So the way that we do this is, at the moment, we track over 1,000 different cryptocurrency related social media channels. So we scrape data from Telegram groups, crypto subreddits, popular Twitter accounts, and other sources of information, social media information, where the main topic of discussions are cryptocurrencies. And we use this data to create new metrics and new ways of visualizing the average sentiment of the crowd towards a particular topic or a particular coin. So one of the things that I want to highlight right now is what the general sentiment or vibe of the crowd has been after the correction. So here we have a tool called Social Trends. Essentially, it works like Google Trends, but only for crypto. What you can do is you can enter any word or a phrase, and it will show you the amount of times that word or phrase has been mentioned on cryptocurrency channels that we are tracking over a particular amount of time. And you can plot those mentions over the price of a specific coin to look for any types of correlations. So one thing that I like to look for every time that there's a flash crash or a market-wide crash is the amount of mentions of buying the dip, right? So if I go here and I look for mentions of buy and dip, so this is a search parameter that you add if you want to look for all of the messages that have buy and dip in the same message, right? Both of them together. What you're going to see, well, first you're going to see a massive spike in buy the dip mentions, right? Suggesting that the crowd, and I have seen this on my timeline as well, the crowd has been fairly confident in the longevity of Bitcoin's rally and the market in general, and suggesting that this is a good time to accumulate at a discount. Now, based on some of the backtest of our social metrics, and I think this is sort of it makes sense from a behavioral perspective, but also based on some of our backtest, these extreme positive sentiment moments in the market, extreme market confidence, market euphoria, they usually aren't friends to cryptocurrencies. In fact, they often coincide with the local tops or incoming price consolidation periods because the market is becoming a little bit too greedy, a little bit too overvalued, and as a result, there's a need for another sort of normalization of these metrics. So if you look at previous times that the crowd was talking about buying the dip in the last year or so, you will notice that they are quite often early to the party. So, for example, after the April crash, the first time that we saw a spike in buy the dip mentions was here on April, I think it was like April 18th. Yeah, so it was the first bottom. The crowd was already moving. So the mentions of buying the dip were already soaring compared to like the last couple of months, suggesting that the average retail trader was looking to move into the market once again at discount prices. However, it really wasn't until another correction, another leg down, that we saw the crowd being quote unquote right this time about buying the dip. So very often, retail investors are too anxious to get back into the market, and as a result, they quite often can be too early to the party. So once again, if we look at what happened after the May correction, there were buying the dip mentions or spike in buy the dip mentions here at the first bottom, here at the second drop, here at the third drop. It wasn't really until here that we could say, okay, yeah, the crowd was technically right about buying the dip. So in general, like I said, these sort of exorbitant levels of confidence that we sometimes see on the charts when it comes to social data, they're not essentially a great sign. They point to the fact that the average retail investor is still very much sort of greedy and very much confident about the future price performance of Bitcoin and the market in general. And this is to be expected because even though Bitcoin is struggling to sort of push back to its all-time high, we have seen other coins break all-time highs and continue on their massive rallies over the past couple of weeks. Solana being the one example. Solana is already up by 28% on the day. So there are reasons why the crowd thinks that this is just a blip in the radar for Bitcoin's price action, and we're going to see another sort of recovery happening over the next couple of days. For me, I would be a little bit careful because, especially based on historical trends, the crowd is often too early to the party. They start making moves way before they ought to. So yeah, if there's anything to learn from this chart in particular, is that there might be a more room to the downside to go before the crowd is actually proven right. So that's one thing that I wanted to show. The second thing that I wanted to show is this chart. So like I said, using our social metrics, we have created a variety of indicators that allow you to view the social sort of ecosystem of a project, and how much the crowd is talking about a project, and what is the average sentiment about a particular project or a particular coin. So one metric that we are quite proud of, and that I think we are the only one really offering on the market, and I'll show it to you right here. We call it weighted social sentiment. Essentially what it does is it tries to visualize the average mood of mentions towards a particular coin on crypto social media. So the way that that works on the back end is our systems collect over 100,000 new daily text messages. And then about a year and a half ago, we've developed a machine learning algorithm that labels all of these messages. Let's say we collect thousands and thousands of Bitcoin related messages in particular on a daily basis. So all of those messages go through a machine learning algorithm that labels them as either positive, negative, or ambivalent. And the result is this chart, this metric, which essentially shows the average sentiment towards Bitcoin currently on crypto Twitter here, adjusted for the unique mentions of Bitcoin over time, just so it gives a bit more accurate numbers. So overall, as we can see right now, and I can actually zoom in instead of using a daily interval I can switch it to a 12-hour interval to show it in a bit more high resolution. Essentially what you're going to see is that the sentiment towards Bitcoin has also started to rise a little bit over the last couple of days. So there's a divergence between the price of Bitcoin moving up and the sentiment towards Bitcoin moving down. Now, as you can see, there was actually a opposite divergence in the months past, where the average sentiment towards Bitcoin was actually becoming more and more bearish as the price was rising. So in our opinion, or sort of based on historical anecdotal evidence that we have seen, these types of divergences are good for the coin. So essentially, extreme spikes in positive sentiment are rarely friends to cryptocurrency, similar to sort of extreme spikes in buy the dip mentions. Like, for example, if you look at previous times that Bitcoin's sentiment was very high, it was very high at around its price all-time high. And also, there was quite a big spike in Bitcoin-related sentiment as it started to crash back in May. If you remember, this was the time when Elon Musk said that Tesla will no longer accept Bitcoin as payment. And so a lot of people thought, we've been pumping for months now, this is actually a great time. This is obviously just a news-related drama and news-related pushback. So this is a pretty good time to start accumulating BTC once again. Right, so there was quite a lot of buy the dip calls back then, and in general, the sentiment towards Bitcoin, the average mood towards Bitcoin was very positive, very euphoric, and obviously was wrong. There was quite a long ways to go down before we were able to recover, right? So we can sort of see the similar thing here at the first leg of the rally. So in general, generally speaking, extremely high social sentiment or positive sentiment is not necessarily a great sign for the longevity of the rally. Now, we have seen, once again, just to reiterate, we have seen Bitcoin sentiment move back into a bearish on average as it started to grow, which in our mind was actually a pretty good sign, because it suggested that Bitcoin is sort of flying under the radar. A lot of people were just too occupied with Solana and Polkadot and Phantom and all of these coins that were making new all-time highs, whereas Bitcoin was sort of slowly inching towards, potentially moving back into price discovery. But the average mood towards Bitcoin was relatively bearish, because compared to a lot of altcoins, it just wasn't doing that well. Its market cap dominance was declining rapidly. The lowest that I've seen was at around like 41.5%. So on average, Bitcoin was lagging behind a lot of other cryptocurrencies in terms of its market gains. So it's no surprise to see that even though it was rising in price speaking not comparatively, the average sentiment towards Bitcoin was moving down fairly significantly. Over the last couple of days, we are once again, for the first time in really quite a while, in maybe a month and a half, we are seeing a significant spike in the average sentiment towards Bitcoin, suggesting that the crowd is once again being, fairly confident, not as confident as maybe here, but relatively confident that we are going to see a short-term relief and that this could be a good time to start accumulating some BTC. So from a social perspective, there are a few concerning factors or concerning signals that suggest that the market is still a little bit too greedy and has not been inflicted enough pain where they have lost all of their hopes and dreams, which is usually the point which we look for in order to suggest going back into the market. So for the time being, we're just not seeing it. We're seeing quite a bit of cost, not where you want to be if you're looking for a sustainable rally for any coin, really. So yeah, like I said, obviously this is not to say that we are poised for another leg down. It just suggests that there's an increased risk of a short-term correction in order for these metrics to normalize and in order for the crowd to, once again start doubting Bitcoin's future and, sort of start undervaluing it a little bit and overselling it a little bit so that the bulls can move back in. So that's one other thing that I wanted to mention, Andrew. Now, we are about 40 minutes in. So yeah, I'm okay with showing a few other metrics, but if you have any questions specifically, or if anybody from the chat has questions or specific assets that they want us to look into, yeah, I'm open for that as well.
Yeah. So we have oh, this is cool. We have a question from Twitch. So Hyena MC wants to know, what timeline do you have for the bull market ending? What's your ETH price prediction? Again,
Right,
this is
so
not financial advice, but over to you, Dino.
yeah. So as far as the bull market, the longevity of the bull market, I've actually been fairly skeptical, just based on the several sort of macro on-chain indicators, and I can show them here. So I'm not going to talk about specific price points, but from a macro perspective, for a while now, there have been several sort of concerning indicators. The one that I really like to look into is something that we've developed actually at Santiment. It's called mean dollar invested age. It's another sort of a mouthful of a metric, but I'll explain it in very simple terms, hopefully, so that everybody can understand. And I'll look for the last 7 years of data, just so you can see where we are right now. All right, and then just moving it to a daily interval so that we can see it a bit more clearly. All right, so mean dollar invested age. Essentially, what this metric does, and you can see here the sort of the informational tooltip for every metric. It shows the average amount of days that each unit of Bitcoin has stayed in their respective addresses, adjusted by the price at which each of those units of Bitcoin were acquired, right? So in very simple terms, what this metric tries to do is it tries to visualize the cycles of accumulation and distribution. So when you see a declining, first of all, let's talk about a rising slope. When you see a rising slope in mean dollar invested age, it means that the average age of coins is rising, meaning that the coins are becoming older. What we really mean by that is that the coins, in this case Bitcoin, units of Bitcoin are not being moved on the blockchain all that much. In other words, they are staying in their respective wallets. People are hodling on average. So the sort of the general paradigm or the general behavior on the network level is towards hodling and accumulation, right? And so this is what you see when you're looking into a sort of a rising slope. And then a declining slope is something that means it points to a market-wide or a network-wide redistribution cycle. It points to, and actually I'll zoom out to 2012 and 2014, so you can see what happened there as well. Essentially, it points to a period of time where the average age of Bitcoins on the network is becoming younger. It means that the units of Bitcoin are being transacted more often on the market, and in general, it's a period of time where the amount of value being created on the Bitcoin blockchain is rising, because there's more daily transactions, there's more reallocation of BTC between addresses, and in general, if you're looking at Bitcoin from a means of payment sort of narrative, this is a period of time where Bitcoin really shines, right? Because instead of just hodling and not creating a lot of value for its users, there's a period of redistribution, and here we've seen a massive drop in Bitcoin's mean dollar invested age, which essentially pointed to a sort of market-wide redistribution. I think this was a period in time where it was a first wave of really cryptocurrency enthusiasts. So I think there was a lot of redistribution from early adopters of Bitcoin, people that have acquired Bitcoin here, into early sort of a mainstream adoption. So this was sort of the first level of redistribution, or the first large redistribution cycle. There was a second redistribution cycle here in 2019, and then there was another massive redistribution cycle between sort of October and May of 2021. Which I think sort of falls in line with the idea that there was a rising institutional interest, because there seems to be quite a lot of Bitcoin moving away from sort of retail addresses and relatively small size addresses into these millionaire wallets. And this is what we've seen here, right? So now looking back into what those slopes have done to, or sort of how they have coincided with Bitcoin's price action, what you can see is that the mean dollar invested slope usually tends to sort of start declining somewhere in the middle of the rally. So it happened here, it happened also here, and it happened here as Bitcoin was also already sort of starting to move up. We see the beginning of redistribution. We see once again the activity on the network start to ramp up, the amount of value on the network being increased, and in general more and more transactions occurring. So at some point in time, the mean dollar invested age slope starts to bottom out. It moves into a opposite direction. And so far, in the past couple of cycles, this has coincided with a local top, or actually a bull cycle top. It happened in 2013. It happened in 2017. It also happened in 2019. And yeah, it happened here as well, at least for the time being. Now, this is obviously, like I said, a very long-term macro indicator, so it doesn't mean that it's a final nail in the coffin for Bitcoin's short-term rally, but from a bull cycle perspective, it is certainly a little bit concerning. Because what this suggests at these points in time where it starts moving back into an upward position or an upward slope, is it suggests that the average age of Bitcoin, of units of Bitcoin, is once again starting to grow, meaning that Bitcoins are once again becoming dormant. There's less activity on the network. There's less value being created on the network on a daily basis. And so from a fundamental perspective, there's also just less redistribution and reallocation of Bitcoin going on. It seems like holders are moving back into a dormant position, into hibernation. So previously, over the last couple of bull cycles, this has sort of coincided with the beginning of the end for that particular bull cycle. So this is one of the metrics that really rubs me the wrong way as far as the longevity of this rally. There could obviously be another sort of strong push upward, not putting it out of the question, but from a macro indicator, until we really see the amount of activity on Bitcoin network start to ramp up again, until we see maybe another redistribution cycle occur on this chart, I'm fairly skeptical about the sustainability of Bitcoin's rally over the next, over the next stretch. But yeah, this is, like I said, from a very long-term perspective. What is positive that I talked about at the start of the call, what is positive about Bitcoin's on-chain activity is that it's once again starting to pick up a little bit. So if you look at the sort of daily active addresses for Bitcoin, we can see that once again they are starting to move back into that sort of 1 million and above echelon. And in general, what is relatively concerning is that even though its daily active addresses are rising, the amount of unique Bitcoin that are actually being transacted on the blockchain, which we can see by looking at the circulation of Bitcoin, is still fairly low. Yeah, it's still fairly low. So circulation essentially shows the amount of unique BTC that is being moved on the blockchain. And so there's a metric called the NVT ratio that some of you may have heard, which essentially looks at the market cap of Bitcoin, or any coin, and then it divides it by the amount of Bitcoin that are moving on the blockchain on a daily basis. So the idea here is that you look at the market valuation and you divide it by the amount of value that is being created on the network on a daily basis. So if the market valuation is too high compared to the amount of value that is being transacted, meaning if it's too high compared to the circulation of coins on the network, then that means that Bitcoin is overvalued according to this metric. And then if the market cap is too low compared to the amount of activity in the network, that means that the coin or the network is undervalued, and it might be a good time to accumulate. Currently, the NVT ratio is very red for Bitcoin. Basically, what that means is that the market cap is high, but the network activity is low, right? By network activity here, I mean specifically the amount of BTC moving on the blockchain, moving between addresses, and actually some type of value being created and accumulated on the network. So from those types of sort of long and midterm indicators, there's still a bit of concern on the market. Now, it's not to say that they can't change and they can't sort of move back up into a positive domain, but for now, they're just not.
So Dino, so I'll just cut in there for a while. So for those of you who are traditional investors, what Dino mentioned earlier about the NVT ratio, that's similar to kind of like your PE ratio.
Yeah, it's basically it's an on-chain attempt to sort of create a surrogate of a PE ratio, right? Because Bitcoin doesn't have an earnings report. So what do? Right? Well, what you can do is you can at least look at the sort of daily value that is sort of the combination of the total amount of daily value that is being created on the network, and daily value is computed by just the movement of BTC between addresses, right?
Yep. Cool. Hey, so I'll just cut in again. So look, for those of you who are listening in, if you have any coins that you'd like analyzed, or if you have any questions to ask Dino, now's really a good time. I mean, you've got about 10 minutes left, but
yeah, I mean, if you guys are interested, also I always say that we do these weekly calls as well over on our YouTube channel, Santiment. Just search for Santiment on YouTube. Every Friday at 4 p.m. Central Eastern Time, so that would basically be like an hour and 10 minutes from now, tomorrow. We are going to go live on our YouTube channel where we sort of look at the market in general, but we also take at least like 30 to 40 minutes to answer audience questions about specific coins that they are interested in, specific questions that they have about the market from a on-chain or social perspective. So, if we don't answer your question today, feel free to pop over to our stream tomorrow, and let's talk more there.
Yeah, so basically it's 10 p.m. tomorrow night, guys. 10 p.m. Malaysia and Singapore, right? So feel free to jump on.
Right.
Yeah. Okay. So we have a question from Alex. Alex wants to know, what's your take on Uni right now? Uniswap.
Oh, to be perfectly honest, I haven't been paying much attention to Uniswap at all. The reason being is that currently, we've been sort of deep in the notebook and in the lab looking into NFTs and NFT related features that we are adding to the platform. So I've kind of been very sort of focused on NFT related projects, living on Ethereum and elsewhere. So we can do some sort of impromptu general analysis of Uniswap from a variety of on-chain angles, just to kind of see where it is together. So let me look at the last, let's say, I think last year of data is fine. And then maybe 8 hours is good. So one thing that we can start with is by looking at the amount of daily active addresses. So you can already see that this was the moment where Uniswap was created. Actually, it was almost a year from now, right? It was like, I think September 17th or 16th, 2020. Yeah, so it's just coming up on a year. So I'm gonna zoom out of this one because this was obviously the time where the airdrop happened. So obviously there's gonna be an exorbitant amount of address activity. So this is where we are right now as far as the amount of addresses interacting with Uniswap over the last, let's say, 10 months. So like I said, similar to Bitcoin, right? Sustained price rallies usually like to see sustained uptick in on-chain activity. So what we're seeing right now is relatively low amount of activity as far as Uniswap is concerned, or Uni token in particular. We've seen it go to as high as about like 10,000, 12,000 different addresses interacting with Uni on a daily basis. Currently, we're at about 2,000. Now, keep in mind, this is all, relatively speaking, this is still, I think, puts Uni into the top like 10 coins on the Ethereum blockchain. You would actually be surprised just how few coins on the Ethereum blockchain have more than 1,000 daily active addresses. Actually, I can show you that pretty quickly by looking at our screener. So screener is a feature that we have created where to allow you to filter coins by specific criteria. It can be a specific on-chain metric, social metric, a combination of social metrics or on-chain metrics, and so forth. So what I'm going to do now is I'm going to filter out only those coins that live on Ethereum that have more than 1,000 daily active addresses over the last week, so that you can see just how low that list is. So here we see when we reset all of the filters, when we don't have any of them active, we have 2,008 assets currently on Sandbase. So the first thing that I'm going to do is I'm going to say only show me those coins that live on Ethereum, and that's going to cut the list to about 1,200 assets. And then I'm going to go down here to network activity and daily active addresses. And I'll say, show me only those coins that have more than 1,000 daily active addresses on average in the last week. So that leaves us with just 20 assets out of 1,200 of them. There's only 20 assets that have in the last week had more than 1,000 daily active addresses. And this is the list. We started with Ethereum, Hex, Tether, USDC, and then Uniswap is there on the fifth place. Obviously, this is by market cap. Binance, Chainlink, Wrapped, Bitcoin, and so forth. So you can also filter it by the amount of daily active addresses to show you. There we go. So this is the total amount of daily active addresses over the last 30 days. Ethereum obviously takes the first place. Then we've got Tether, USDC, Wrapped ETH, and then Uniswap is at number 12. So it's relatively low. So on average, its on-chain activity in the last 30 days is at about 2.15K. We've got Hex at 3. We've got Axie Infinity, obviously a very popular NFT coin right now, at 4.6K daily active addresses. We've got Polygon, DAI, Chainlink, Smooth Love Potion also within the Axie Infinity ecosystem. So, we've got some NFT related tokens that are gaining ground. And then we've got a lot of, stable coins that are just multi-purpose. So, yes, while speaking in trends, the amount of on-chain activity for Uniswap has certainly diminished quite significantly. Number one, this is still a very used coin. It's in the top 20 coins on the Ethereum network. So, it's far from a dead coin is what I'm trying to get at. And number two, Uniswap is not the only coin that has lost a lot of activity over the last couple of months. Just look at Ethereum itself. This is Ethereum. So this is Ethereum over the last 6 months. So if I showed you Bitcoin, and Bitcoin is looking stronger. So at least Bitcoin's daily active addresses are starting to pick up again. Ethereum's daily active addresses are actually quite low compared to where we were the last time that we were at. Like, for example, the last time the Ethereum was at 4K, it was here in May. And it had about 800,000 daily active addresses, right? So there was a lot of activity on the Ethereum network. Currently, the last time, or sort of the most recent time that we were at about 4K, 3.9, there was around 500,000 daily active addresses. So if we take the difference here between these 2 points, we can see that there's sort of a 35 to 45% decline in the amount of unique addresses interacting with Ethereum. One possible reason for this, and I think this also applies to Uniswap and all of the other coins on the Ethereum blockchain, have been the damn fees. So I'll show you what the average fees to interact with the Ethereum blockchain look like. So as you can see, there has been a massive just a massive surge in Ethereum fees once again, mostly courtesy of NFTs. One of the biggest gas guzzlers over the last week and a month has been OpenSea, the NFT marketplace. It goes OpenSea, and then I think just general Ethereum transactions, Tether, and then I think Uniswap. The last time they checked it. So yeah, Uniswap is still very much active as a DEX, but in general, there is a premium currently for people to interact. They need to pay the premium in order to interact with the Ethereum network. What that's going to mean is that it's going to disincentivize a lot of low ROI transactions. Like, for example, I had a bunch of sort of transactions that I decided not to do over the last couple of days, just because it was like I needed to stake some SAN, which is the token of the SAN-based platform. And I needed to like stake 15 SAN, and in order to do so, it was like $60 in fees or something. It was ridiculous. So a lot of people in my position would just wait until the fees are lower, and that's obviously going to deflate the amount of activity on the network, right? So that's what we're seeing with Ethereum, but that's also what we're seeing for a lot of Ethereum related coins, is that there's just a decline in general on-chain activity, because I think largely because of the mounting fees. So let's go back to Uniswap. So that's as far as sort of general on-chain activity and why I think it's so low. We can also look at the sort of MVRV for Uniswap, which I think is a cool metric. So how much time do we have? Because okay, well, I'll try to be as expeditious as I can here.
10 minutes.
Okay. So just to take a sip of water, essentially what MVRV ratio is, it's a metric that we track very closely for large cap coins. MVRV is an on-chain indicator that tries to calculate the average profit or the average loss of all addresses that have acquired a particular coin within a particular time. So here I have the 30-day MVRV ratio for Uni. What that means is that currently that 30-day MVRV is at minus 15%. That means that the average loss of all addresses that have acquired Uniswap in the previous 30 days is minus 15%. So on average, short-term Uni holders are down 15% on their initial investment. Now, this is an on-chain metric, and it makes some assumptions, but it's still a pretty good gauge of the average sort of investor sentiment, right? So how do you use then this metric? Well, in general, as a rule of thumb, the higher the MVRV ratio gets, it means that there are greater profits that are still unclaimed or unrealized by specific holders. And so as a result, the higher the MVRV ratio is, the more unclaimed profits there are, and the more risk there is, the holders are going to start claiming these profits and applying, sell side negative pressure, negative price pressure. And so there's the higher the MVRV ratio is, the more risk there is, right, to accumulate at those points. And then the lower the MVRV ratio gets, according to some on-chain analysts, the more opportune time it can be to accumulate a coin. So if you look at Bitcoin's MVRV ratio, and we look at the last, let's say, 4 years of data, so this is where Bitcoin's 30-day MVRV ratio is right now. So one thing that you can notice is that we can draw lines around 15% for Bitcoin's MVRV ratio, between 15 and 20%, and minus a few outliers, which obviously are like bull cycle highs and whatnot. Minus a few outliers, generally speaking, with Bitcoin's 30-day MVRV ratio gets between like 15 and 20%, it usually becomes fairly unsustainable. Like, you can count on the fingers of two hands how many days in the last 2 or 3 years Bitcoin's MVRV ratio was above 15 or 20%. It essentially points to the fact that, short-term Bitcoin holders, in this case, we're just looking at the short-term MVRV ratio. We'll look at the long-term in a minute. But short-term MVRV holders are about plus 15 to plus 20% up on their initial investment. And it seems like historically, this is a point in time at which they like to take some profits. So there might be a need for a short-term price normalization, right? So currently, Bitcoin, with this latest crash, is all the way back down to like minus 3%.
18%. Now, on the opposite side of the spectrum, we have several sort of support levels. We have one at around 15%, which is a fairly established support level, and then we have another one at like minus 30%, where almost historical lows for Bitcoin's 30-day MVRV. But in general, Bitcoin's current MVRV is looking much healthier than it was a couple of days or weeks ago. Now, moving back into Uniswap, this metric is best for coins that have a lot of historical data, because you can actually figure out, historically speaking, what were the points in time where long-term or short-term holders like to take some profit. So obviously, Uniswap is a little bit is a younger coin, so there's less data to go off of. But what we can see is that generally speaking, its current MVRV ratio is relatively low. It's not close to its all-time lows, which happened during the correction, but it's down at about minus 18%. So currently, actually it's a bit higher, right? So 4 hours. Yeah, actually it's 18%. I guess it dropped a little bit more while I was talking. So anyway, the current average loss of Uniswap holders is about minus 18%. Of short-term Uniswap holders. So that means that there's not going to be a whole lot of sell-side pressure that we will see like here and here. So from that perspective, it could be the lower this gets, the more potentially opportune time it can be to accumulate a coin, according to some analysts. And then we can also look at the exchange data for Uniswap to see, okay, is there a rise in sell side pressure for a particular coin, in this case Uniswap? And we can clearly see that there has been, similar to Ethereum, there has been a spike in the amount of Uniswap moving to exchanges. We have seen similar spikes around several local bottoms as well, similar to here. Also around local tops as well. So, exchange inflow is equally top, can be equally a top or a bottom indicator. But what it means in current market context is that some people seem to be moving their bags to exchanges in order to reduce their exposure into uni, because they fear further corrections. Like I said, I think in general, from a short-term perspective, yes, this could be quite painful, but it's often necessary to shake out some of the weak hands in order to push us further into to create fertile ground for another relief pump. So yeah, there's a bit of an uptick in the amount of sell-side pressure for Uniswap. We can also see this in the active deposits. These are the addresses that are being used to funnel Uniswap to exchanges, and you can definitely see them being on an uptick recently. They have been on an uptick around both local tops, like here, and local bottoms as well, like here and here and here. So, obviously, these markers are they have very different contexts when they happen while the price is pumping, which means a lot of people are taking profits, and not a lot of people are interested in buying a coin at a premium. And they have a very different context when they're happening during corrections, because at that point it means that a lot of weak hands are selling off. And assuming there's people looking to buy these coins at a discount, these types of spikes in exchange-related metrics can actually be positive for the coin. It remains to be seen, but yeah, so yeah, I think, Andrew, we're already sort of moving into the last 5 minutes of the call. So if anybody has additional questions for me, make sure to check our stream tomorrow, or just join our Discord. It's just discord.net/sentiment. And yeah, we have our own trader groups there, where you can talk about specific chart setups that you're seeing on our platform. At the end of the day, I would suggest everybody that has been watching this to check out app.santiment.net. This is the link to the website. Like I said, we currently have on-chain social media and development activity data for over 1,500 different coins. We are continuously adding new coins and new sources of information. And yeah, there's a 2-week trial for everything on the platform. And even after that, we are one of the most affordable on-chain providers on the market. So I definitely suggest, if you like this type of data, to check out the platform and try it for yourself.
Yeah, definitely one of the best platforms out there, and I highly recommend you checking it out. Hey, Dino, there was mention in the comments section about layer 2 chains. Do you guys cover layer 2 chains like Matic and stuff? And I think the other question is like other chains, like, because there are new chains coming on. So obviously, I think Sentiment's probably planning on how to get the other chains, the data from the other chains onto your platform.
Yeah. So as far as L2 is concerned, we are in the process of integrating some layer 2 dashboards. It's not live on the platform yet, but I know that our developers are working on it. Obviously, it's a very important part of the Ethereum ecosystem now. So we are hard at work at providing that information as well, specifically, I think, for Polygon to begin with. Now, as far as other blockchains are concerned, so at the moment, we currently provide on-chain data for Bitcoin, Ethereum, all ERC20 coins, Ripple, Litecoin, and I believe Binance Coin. And with every new blockchain that we're trying to sort of provide on-chain data for, we need to create a completely new heuristics, completely new infrastructure. It's a very resource-intensive process. We are, however, in the process of integrating two new blockchains. I'm not gonna say which ones because it's just a tease, but it's blockchains that we have received a lot of requests for, right? So in the future, we are definitely continuing to expand our coverage as far as on-chain data is concerned. But even at this point in time, we are by far the most comprehensive on-chain data providers on the market. There are other on-chain data aggregators, but most of their stuff is only focused on Bitcoin and Ethereum. And then the fidelity of their data and the scale of their data falls down massively if you're looking at altcoins. What's great about Sanebase as a platform is that we have the same scale and depth of data for Bitcoin as we do for a altcoin with $10 million market cap. We don't discriminate between those two coins in terms of the amount of data that we try to provide. So long story short, yes, we're working on L2 dashboards, and I hope that they will be up on the platform in a month, maybe a couple of weeks, hopefully. And then number two, we're also adding a couple of new blockchains very shortly.
Well, we're definitely looking forward to it, and I've done my research, and Santiment definitely is one of the most comprehensive platforms out there for on-chain, not only on-chain analysis, on-chain data, but sentiment. Right, sentiment as well, right?
Right,
and hence the name Santiment.
hence the name. Yeah.
Oh, yeah. Hey, Dino, thank you again for joining us tonight, and thank you for sharing your knowledge so graciously. And with that, I think we're at the end of the show. So thank you everyone for tuning in. Do stay safe, right? The numbers are still pretty high. And Dino, any last words?
Just to hope to see you guys tomorrow on the Santiment YouTube channel. Make sure to also subscribe to our YouTube channel because we are, well, first of all, we're looking to grow it. And second of all, we are starting to push more videos onto it. Instead of just doing these weekly market streams every Friday, we are now publishing one or two sort of these types of videos that me and Andrew are now recording. But in shorter form, like anywhere between 10, 15 to 20 minutes, just kind of taking a look into one specific coin or one specific network event and diving really deep into it. So if you like that type of analysis or this type of analysis, make sure to check out our YouTube channel as well.
All right. And with that, we bid you good night and have a great day. Have a great day, Dino, and have a great evening, everyone else. Okay.
Thanks for having me, Andrew.
Thank you, Dino. Bye.
Bye-bye.